Alright, hello and welcome to Camel Finance. I'm your boy Camel, and $4 billion asset manager Stone Ridge has launched the first ever Bitcoin accelerator focused on Lightning. So we are continuing to see adoption, and I'm sure we will continue to see continued adoption. Kazakhstan's central bank is going to integrate its central bank digital currency on the BNB chain. So make of that what you will. We'll get to CBDCs in just a moment. Half of young people want their Bitcoin in a retirement account. You can see that just over half of individuals are looking to add Bitcoin into their pensions. People are looking to protect their money long term from monetary debasement. 90% of Hong Kong's and Singapore's wealthiest investors want to or already own Bitcoin and digital assets. Of course, the super rich are amongst the more financially literate, and so it only makes sense that these sorts of people will want Bitcoin exposure. Meanwhile, nobody is talking about this pertaining to Ethereum. This is the OFAC compliant block visualization for the last 100 blocks. As you can see here, 99 out of 100, that's 99% of the last 100 blocks, have been OFAC compliant, i.e. censored, okay? Enforcing OFAC censorship. This is something that no one is talking about, apart from me apparently, and I'm not trying to hate on Ethereum, but this is, I don't even have words for this. This is no longer something that anyone should be excited about, in my opinion. Doesn't mean I'm not lining up a trade. We'll get to the charts a bit later on. But from a longer term holding point of view, I don't know how you can be bullish on a censored coin. I don't know how you can be bullish on a censored blockchain. And as if that's not bad enough, the CFTC chair is, remember, disagreeing with the SEC that Ethereum is a commodity. The SEC may well be about to come after the Ethereum Foundation and sue them for selling Ether as an unregistered illegal security. So again, massive risk to the Ethereum token, to the Ether token, in my opinion. Let's keep going, because speaking of risk, this is what everybody expects. Everybody is expecting another one of these 3 years up, 1 year down, like we've had before. 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. Okay, everyone's expecting this 4-year cycle repeat, and I just want to caution against this. I'm going to continue to caution against this because I think it's much more likely we get the peak in 2023 and then we spend the remainder of the 4-year cycle going down. That remains to be seen, but it seems that many people think Bitcoin and equities making new all-time highs in the next 3 to 5 months is impossible, but the data very much says it's more probable than impossible. I've been outlining this scenario here. Congress to blow this move off, to create a blow-off top and then be banned from owning stocks at the top. Here's the SPY chart where I illustrated this. I said that we're likely going to form this sort of head and shoulders. Granted, we did sweep this low, and then I said that it's quite possible we're going to have this blow-off move to new all-time highs, and then they're going to ban Congress from owning the stock. So if you haven't seen that video, go and watch that video. I'm going to be championing this as a primary thesis until it's invalidated. At the moment, it is very much valid. Even if we get a bit more chop, it'll only take a bit of dovishness from the Fed to catalyze this move to the upside. And if this starts to unfold, it's going to completely ruin the majority of the market. Speaking of pivots, the Bank of Canada has just joined Australia's central bank in making the turn to a lesser than expected rate hike. We saw Australia step down the amount of basis points that they're hiking. We've just seen Canada perform a 50 basis point hike, which was below the expectation of a 75 basis point hike. In addition, the Bank of China has slowed to 50 basis points versus 75 expected. And people have to understand that it's not about earnings. There's a lot of earnings coming out this week. If they're low, it's going to make people very bearish. But remember, it's all about liquidity, and liquidity comes from easy money and the move towards lowering rates. Granted, lowering rates is a long way off, but this pause is just around the corner. Bad earnings only enhances the Fed pivot, which pushes rates down even more. And if we get a dip due to lower earnings, buy all dips with both hands. And remember, that would also coincide over the next few days with the cycle lows. Japan's upcoming stimulus package is $454 billion, just under $500 billion. They are printing full speed ahead. And speaking of Japan, the Japanese life insurance companies plan deeper cuts to its holdings of US government bonds. Nobody wants to buy these bonds. Nobody wants to hold these bonds because they are guaranteed to lose money, and the currency they are backed by is guaranteed to die. This is why I'm so confident in saying the central bank is going to have to step in and be the buyer of last resort. This is why I'm so confident in saying the central bank, the Fed, is going to have to turn the printers on soon, because there is no bid underneath these bonds. And after cutting interest rates aggressively as inflation spirals out of control, Turkey has just announced it's going to launch its CBDC in 2023. This is how the game is played. we get to the end of the fiat currency cycle, they destroy the fiat currency, and then they rebuild it. Usually they peg it to gold and start again. This time round, it's going to be possibly pegged to gold. I think that's still going to happen, but it's going to be linked to a central bank digital currency. The difference this time is it's going to come with a whole heap of tyranny and digital IDs and digital enslavement. Someone underneath is asking, is the UK next? I don't know if they'll be next, but I certainly don't think that we are very far off now. They've installed the WEF puppet that is Rishi. Rishi, of course, has deep ties to digital IDs and the WEF. You better opt out, and you better do it quickly. Remember, Bitcoin is the exit. I'm sorry, sir, your card has been declined because of your political views. This is a real-world scenario that is coming to anyone that doesn't hold physical gold, silver, and physical Bitcoin. But there is light at the end of the tunnel. Bitcoin is not just freedom, Bitcoin is hope. It has been a year since the CBDC launched in Nigeria, and less than 0.5% of Nigerians are actually using it. The answer is simple. It's because they have opted out. They have their own money. They are their own banks. They have their own freedom. They have separated their money from their state, and they have opted out of the system using Bitcoin. Been a while since I've mentioned food, but still very much a concern for me. Stalin called the farmers the enemies of the people by taking control of the food, and then 7 million Russians were starved to death. Now, 100 years later, the WEF is opening the war on farmers. Do you notice the similarities? I've been saying this. Food shortages are coming. Even if they don't, you can always stock up food responsibly and then eat it later or donate it to charity. Please, please, please take this caution. I'm not trying to doom monger, but prepare for the worst and hope for the best. For those of us that are lucky enough to be aware of what's going on, for those of us enough to have the 2020 vision to see through all of these psyops propaganda campaigns, opportunities like this are very, very rare, but they are right there staring us in the face. The smart money is positioned long at a level never seen since 1994. Do not fight the smart money. I'm currently long on a few things. We'll get to the charts in just a minute. I hope that makes me smart money. It's not a popular opinion at the moment. Since 2000, the S&P 500 has always been higher a month after this signal has triggered. So this tells us to expect us to be higher 1 month from today. There is bearishness everywhere. The sentiment indicator was at its lowest level since C19, as you can see here. So bearishness continues to spread like flu, but I think this is going to provide massive, massive fuel for a huge face melting rally over the coming weeks. And one last point before we get into the charts. Remember, stocks tend to bottom long before the economy does. You can see here in the dotted blue line, this is the S&P 500. It forms a bottom and starts an uptrend long before earnings, payroll and GDP. The same is true here. This forms a bottom and starts an uptrend long before the economy does. The same is true here. The same is true here and here and here, of course. Okay, so it's quite possible that even though the economy looks like it's falling apart, it is falling apart. There's nothing to stop this scenario playing out until we roll over and take out these lows. Only that will invalidate this. The more upside momentum we build here, the more this becomes validated. We have just about breached this red line of support for the dollar. I would likely think that we're going to perform this sort of undercut fake out. I think we're going to have some sort of reaction here. To me, it doesn't make sense that we would just slice right through this. Doesn't mean it couldn't happen. If it did happen, everything's going to get very, very bullish very, very quickly. But based on where the cycle counts are for everything else, and based on the fact this has been good support going back to February, I would just be surprised if this was to hot knife through butter. So I think we do get some kind of reaction here, some kind of bounce up. How high it goes is anybody's guess, and then I think it's going to roll over. No one will really understand why, but I think that's what's going to happen. S&P 500, we are currently on day 36, so is a pullback over the next 4 days to drop down into a perfect 40-day cycle low due. Is that what's coming? Is it going to coincide with a retest of this downward sloping trend line? And is that where we can get fully long with full exposure for equities? Quite possibly. I currently have a hedge type position where I have some long exposure via the NASDAQ. So far sideways into this position. We will see what happens, but at least if equities are just going to rip higher from here, if they're not going to respect the cycle low, if they're going to call this prior low here an early day 33 low, then at least I am prepared for that and ready to see the NASDAQ rip. The Dow Jones continues to lead. It led on the way down, remember. It was the first to take out its low, and it was also the first to recover, and it was the first to break out. The Dow Jones continues to support my thesis of this. Tech is under pressure this week because of the big tech earnings, but I think by next week we will have found this cycle low. The market will have digested the earnings, and equities are going to start to produce this upside rally that everybody hates and nobody understands. The UKX, I was looking at this just before I turned this recording on, and I've got to say that with hindsight, this was likely the entry. The first one, we did well for being patient. We would have been stopped out here, undercutting the low. The second one, perhaps this was the breakout, and the trade should have looked something like this. Perhaps that was how we should have entered this trade. With hindsight, it's always very easy. I was hoping that we would get one final dive down, as we often do, and then this trend line would have a much less steep angle. It's still possible that we could get a rollover and move this trend line to something like this, and then the long would come from here. But I think likely I'm going to let this one go. Don't have to take every single trade. No problem to let some of them go. If we were to consolidate under this horizontal here for a few days and then break out, you could certainly take a long from there, targeting the top of this range. That would be another trade idea. But given that my focus is going to be on the S&P, the NASDAQ, Tesla, Apple, and then these Bitcoin-derived equities, I don't really need exposure to the UKX as well. Looking at Coinbase here, looks like we're going to get faded, drop into the cycle low and go. Ready for that. Been lining this up for weeks now. The same is true of MicroStrategy. Looks like we're going to form a swing high here, drop down into this cycle low, and then these are going away in longer term accounts. And this breakout retest, is it going to resume? Even if it does, I still think we've got to roll over into this cycle low. And the same is true of Marathon. Look, Marathon getting a pullback. So is it time? Are these about to find their cycle low? I think they are. Quick look at Tesla. So longer term account holding this long and strong, continue to push. Same is true of Apple, around break even for now. I wouldn't be surprised to see some sort of shakeout move for Apple because we've got earnings coming out later today. But I'm ultimately not too worried about that and looking to hold this for the duration of what I believe will be this big blow off move. Haven't covered oil in a while. It was going sideways doing nothing, but we're back above this line. I think we are still going to continue to push up towards this yellow line here. So I think it is still going to look something like this. I think we're still going to make our way up to $100, and that's where I become interested in shorting this. Timing's always difficult, but once we get up into that $100 range, I will be looking for some form of trend line breakdown, and then we can entertain that big short from there all the way down to much lower numbers. So a bit more patience on this, but that's going to be a really good trade when it sets up. Gold, as I said, locked in some profit from my first short. Now I'm looking to see if the dollar is going to fall off a cliff, if it's going to hot knife through butter through that red trend line. Where's the dollar? If it's going to just hot knife through butter here, then gold should go on a tear, right? Gold should break out of this big blue downward sloping resistance line, and we can get long above here. So if that happens, that's fine. If, however, the dollar gets the reaction I expect it to and makes its way back up into this range before breaking down, then that would likely coincide with a test of this blue line which fails, and then a break of the yellow trend line, in which case I can re-enter my short. It probably looks something like this. And we will be targeting the much lower numbers on this short. So that's how I'm playing gold at the moment. Profit locked in and waiting to see how this unfolds. Here's Bitcoin. So that green line denotes, the green vertical line denotes the 60-day cycle low. Currently about 9 days approximately away from this. I expect this move to get faded. I expect this to kind of end up looking like one of these Bart Simpson patterns where it chops up, it goes straight up, chops sideways, and then comes back down. That's kind of what I'm expecting to see. However, I believe this last dip, wherever it forms, no matter whether it's up here, down here, or below these lows, wherever this dip forms in the next 60-day window, I believe that is a buy, and I believe that is long and strong and going to see much higher numbers. That's how I'm going to be entertaining the Ethereum trade as well. I think we're going to get rejected off of here, drop down into this cycle low for Bitcoin, and then I believe that's where the long comes from, whether it's here, whether it's all the way down here, who knows? Who knows where it forms, but wherever we get a swing, I believe that is the long for Ethereum. You must use a stop because of the risks with Ethereum. Remember, you must always use a stop, but particularly the case with Ethereum. XRP, I think this is going to continue to chop around, and then I think we're going to blast upwards. So I hope that's what I see, at least long and strong, continue to push. MATIC, holding my MATIC position. So again, have to be open to a rollover into that 60-day cycle low for Bitcoin. But this appears to be leading for now. This looks a lot more bullish than Bitcoin and Ethereum to me. So we'll see how this goes. Is MATIC going to be a big leader, targeting at least $1.50, if not $2 and up? So we'll see. If we get this melt up situation, then my target for pretty much all cryptos is around 2 times the all-time highs. So take that as you will. I know that won't be a popular opinion at the moment either, but we'll see. And Zcash, again, I think up and down into this cycle low, and then I'm going to tuck some of that away. Not sure exactly where the stop will be. Probably will be below all of these lows, and then targeting again at least all-time highs, if not 2 times the prior all-time high. So that remains to be seen, one day at a time. For now, chart of truth, look, bouncing off a resistance. I think this is going to push up towards 4.5%, and then I think we could actually see a rollover in the early to middle of November. So all the stars are aligning. Got some nice trades going on, got some nice trade ideas, a little bit more patience. I mean, next week we're into November, and then it is actually time to find these cycle lows for crypto. Then it's time to actually see if we can start a bull market for Bitcoin and the cryptocurrency market, if we can actually get this melt up scenario play out, which I think is on the cards. If you want to see all of that, make sure you're subscribed and turn the notifications on. If you want to see how I deal with these markets in real time as a pro swing trader, make sure you turn the notifications on as well. Go ahead and follow me on Twitter. Drop a like on the video if you appreciate the work today and found value. In the meantime, take care from me. All the best. Cheers. Bye.